Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Alright, what's up guys? How's it going? Ted here with Bodies and Wicks. Man, I should have got these videos out a lot earlier to give you guys a heads up on anything, but if you've been following my videos, you kind of know a heads up on what I'm probably going to about to tell you on EURUSD. I got a couple more videos I want to try to push out, and I'm going to cut this out, but give me 1 second, I'll be right back, and because I'm going to get a drink. Alright, and I will definitely cut that out. I felt like I knocked something out of the computer, but I don't think I did. I think everything is hooked in, and we are well to go. Alright. Anyways, EURUSD, what happened last week, and what is going to happen this week? Well, if you remember my sell that I had all of a sudden changed to a buy, I think that was my last video actually, was showing exactly where I bought, and I haven't done anything since then, but that buy turned into a good buy, and I actually haven't done the video. I actually exited that trade probably the morning whenever I started to see the pullback. I didn't know how far it was going to pull back. I just thought I'd exit the trade, wait for a pullback, and try to enter again. And I thought the pullback was going to be from like the wherever the New York Open was starting to the London Open. Once I got to start looking at the 5-minute chart, the pullback was even smaller than that. It was a crazy weird pullback. So I can actually go to the charts and show you. So let's just go ahead and take a look at that. I'm looking at bar chart right now, but first what I want to do is so this is the overall picture, I guess you could say. If you know me, you know that I have been focusing on whenever they started shorting, right? So I think they started building their shorts right here, so I drew a fib from the very top to where they started shorting. So as you can see, the red down here in the Committed Traders report, they've been shorting throughout, well, basically since here to here. I don't think they've been shorting that entire time. I think they just build up a lot of shorts to where they were net short. They were so net short that whenever they were long, that their net shorts just wouldn't catch up, because they're still net short. To make money, they have to get net long again, right? To get net long again, they're gonna have to get past where they started shorting, and I believe this is the point to where they started shorting. So, and this is a daily chart here, and this is that point back on March 9th. It looks like the price was somewhere around, it's overlapping fibs right now, because that's the good thing about my charts. Somewhere around 1.45. All right. So that is where I drew those two fibs from. Now once you take a look at what's happening, well, that's again, so that's been since March 9th, right? Once we take a look a little bit closer at what's been happening recently, of course, you see we had that huge drop 2 weeks ago. Came out of nowhere. It just felt like it just completely dropped the bottom, and then for 2 weeks we've been slowly going up. So if we want to start taking a closer look at this, let's go into a 4-hour chart. And well, actually I accidentally went into a 1-hour chart, but let's do a 4-hour chart. All right, so if we do a 4-hour chart, and we are looking at the very top right here to where it made that high, that was a complete fake out, right? So it made everybody think, you know, they're gonna go higher, turn around and sold, took everybody out that was buying through, well, holding the buys through here, that didn't take profit or didn't, you know, protect their stop losses, anything like that. Or people that just bought at the very top and thought this was gonna, you know, take off. So turnaround came back, but then that's when we had these moves in here, and this is the part where it gets interesting, is once we start focusing in, and I'm gonna double click because I'm gonna get rid of, so I've been using the COT report as my long term. Tells me, you know, the position that the traders are in. I also have this is an awesome indicator that I found, and it's open interest money flow. So it kind of follows the open interest along with the money flow. It doesn't follow the open interest 100%, but it's close enough to where you can kind of understand where the open interest is. As you can see, it's moving right now. If it's moving up, that means, you know, as you can see, it's in the oversold area. If it's below, it means it's undersold. I wouldn't say undersold, but, you know, if it's in the green, it's more of in the sell area. If it's in the red, it's more in the buy area. But we're still nowhere near being oversold yet. But also there is another indicator that I've been using, open interest stochastic money flow. So it acts as like kind of like an RSI stochastic, but also incorporates the open interest and the money flow at the same time. All great indicators. Been kind of using all three as you know, long-term calls. But enough of that. So what's interesting now is, now that we are getting back up into this area, right? So that fib that I had drawn from the top of, if we go back here, I drew the fib from the top of here, right? And the bottom of it comes to here, right? I didn't draw all the way down here at the very bottom. I drew it to the very top to where they started shorting, right? I don't think they were shorting all the way through here. That would have been just dumb of commercial traders. Instead, I think they built up a lot of shorts here, and that's why they're net short, right? And then, of course, they held those shorts, and, you know, and they made a lot of money. Eventually started making some long calls, but still they are net short, especially once you get up in this area and you get up in these higher areas. They build up shorts, which tells me eventually this thing is eventually going to go, you know, very, very, very short. The question is when? Well, I think soon. So if we look at this huge drop, right, and then the last 2 weeks we've been slowly building up, we want to know where it's going to drop from. I drew that fib that I drew from, that I just showed you, and we draw another fib from the top of here down to this newest low. What you have is a confluence, right, of the 64% of the newest fib and the 70.5% of the previous fib. Both of those are laying on top of each other. Not only are both of those laying on top of each other, both of those are laying on top of each other right in the middle of an order block. Actually, at the very bottom of the last up candle before going back down. So it usually happens in the last up candle before going back down. This is a push by big money. That way they can get basically a better deal, right, on their sell. So as they're pushing it up, they're also selling at the same time, or they're adding in more and more sells. That way they get a better position, right? So at the bottom of this is where both of these lines confluence. I'm not even kidding. You know, if you draw, as you can see, this is where I started this one going this way, right, to here. You can see it comes all the way out here, and you can see the other fib is going the other way. As you can see, both of them are laying right on top of each other right here, right? And what that number is that number is 1.1597, basically institutional level 1.86. So that's where I personally think is where we're going to see it tap and then start falling. So I myself am going to enter a little early, probably with a pretty big position. I'm probably going to enter a little bit earlier with the very, very small position. Just in case this right here, because you do see this green candle here, this is also would be considered part of the order block, and the reason I would think it would be more of the order block is because it does have a lot more volume than this one does. But to me, just to have both of these confluence at the same exact time, I think this is going to be more than likely what's going to happen. Even though I have my stop loss way up here, I'll probably start it off up there, but to be honest, you probably won't need it until there. Right after this, or just above this high here of this green candle, which is 1.18719, right? That is anywhere above there, probably 10 pips above there will probably be probably your best. So stop level 1.18, what was it 1.18719, 1.187 1.18719, so 1.18919. Well, that didn't work out too well. No, that's the fib. Sorry, guys. Inputs. $919. I would think that would probably be a pretty safe bet. 41 pips, a little bit more than I like. I usually like about 30. But then again, we are doing 10 more pips than what we would normally than this high, just to be safe. And I'm also entering 10 pips early than what I think that this is going to tap into. So I think it's going to tap into at 1.186, 1.855 at the earliest. So I'm entering at 1.8500. I'm not giving anybody advice as to what they should do. I'm just simply analyzing the market as to what I think it will do. So this is what I have my limit set for on my paper trading. I'll be paper trading this. I am not advocating anybody go out and trade their own money. I'm just simply trying to analyze the market and see what you think. So again, right in here are where institutions are. Basically, this is a huge area where you can see it's just going back and forth, where they're just building up positions. And to me, this is building up as short positions, or else it wouldn't have went so short so quick. So once it comes back up to this area, where you think it's going to go? It's going to go short. They're not going to go straight through it. They're not going to say, oh, well, I made all my money here, let's turn around and go the other way. Commitment to Traders report doesn't say that. Commitment to Traders report shows they are still net short. Actually, they are so net short, they are negative 226,000 orders short. Yeah, I think that's what that number means. I'm not exactly sure what that number is at negative 226,000. I want to say it's contracts, but they are lessening their shorts, which, of course, you would have to lessen your short to, at least get up to this point. But they're still extremely net short. So, for me, and this doesn't even do it justice, or at least on the screen anyway, for them to actually make money, like I said, they would have to actually go below to where they started shorting, which I believe is going to be, and it's, if you look at the confluences, the one level of this, or actually say this is the, where I started, the fib. And if you're going the opposite way with the current fib, the confluences are just astonishing, how they overlap. So this just tells me, that this has to be spot on. So if you're at the 127%, this is basically your first position that you want to take off is going to be right at the, the 100 level, 0 level, whatever you want to call it. I'm calling it the 100 level. Some people, the way they draw their fibs is, they'll actually have their extensions drawn up this way. That way they flip them around. That way they're the right number. Whatever. I'll just put a negative there and I'll call it the 127% since that's the way I'm going anyway. So, first confluence is the 127%. That is going to be the 0 level, or the 0 level of the primary fib, and then if you get to the 0.62 level, that is another confluence. That is actually, I think, the 0.27 level of the major fib, and then once you get to the actual the pivot point, if you get to this, basically you're doubling this move, right? So from here to here, the very top, right, to this point at the bottom, right, if you double that move, then you're going to get to this -1, which is at 1.1218, and just also below that is the confluence of, I would say the confluence, but the 162 percent take profit level, the second take profit level of the major fib point. So to me, this is my target right here, where it says overlap pivot extension. Just because, one, it's double the move. Also, it's it's 62 or 100 or 62% more than where they started shorting from. So for them to actually make some decent money, if I was a bank, this is where I would be heading, to rake in some good profits on my shorts, considering how deep short I am. Look how deep red it is. And just to give you an idea of how short that is, let's just go to the British pound, right? They're long. They're already in their longs. They switch from short to long. They're already doing their longs, right? If we do USD CAD, they've been kind of switching around. They've been going short for a little bit. They went long for that short little time, and now they're going back short. So if that just gives you any kind of idea of how deep they are in shorts in euro, and it just tells me that how far they have to go to make money. So so they're gonna have to get pretty far. So the biggest question is, all right, where do we short it at, right? So that's pretty much my main projection here, and that's what I'm trying to you know, I guess you could say portray in this video, is that you have on a 4-hour time block, you have the 2 up candles, right? These 2 up candles here, these 2 green candles will constitute as probably one primary order block, right? So it could start anywhere in between here and here, and that's why I have this big red box drawn out. I'm going to be paying very close attention. I'm going to be staying up during the London session, because that's when I believe this is going to happen. I believe this is going to happen during the London session. However, I do think with the 2 confluences that I do have that are hitting just the bottom tip of this last 4-hour candle, I gotta say that something just smells funny to me, that this is gonna be, you know, the magic Mike point. You know, some guy's gonna come out breaking out of a wall, you know, in a stripper cop costume, you know, and throwing donuts and cheese crackers and Red Bulls and stuff, and I don't know, like, as soon as it hits that point, that's when I think it's gonna start dropping, and we're not gonna see it. I mean, well, you know, we're gonna see it bounce around for a while, that's for sure, and things keep moving around on the way down, but I don't think it's, once it hits this point, I don't think there's gonna be a return. Of course, there could be a return, you know, to this point, especially if it, you know, it does like a teacup type thing to where it hits here and then it turns around and it hits here again and it drops. Yeah, we could definitely see something like that, but I don't see it getting any higher than 1.9 at all. If it gets higher than 1.9, I'll shave my head. How about that? I'll shave my head if it gets past 1.9, because I don't see it getting past that. I really don't even seeing it get past 1.8755 or 775. But yeah, that is my analysis. Now, where does it go from here after it shorts? That's a good question, you know, because I didn't think I thought here, whenever we were shorting, because I was shorting this right in here, I was shorting it, and then I was shorting it, and I was shorting it, and then I thought it was still going to go lower once it hit this, and it bounced off this, and I was like, what the hell was that? And I had to take a closer look, and I was like, oh crap, there's an order block right there. And luckily it came down again, and I was able to sell, or get rid of my positions, I should say, and then buy. And then it took off and turned around and went the other way. Again, I let go, you know, earlier that morning whenever it started doing those pullbacks. And here, let's get into those 15. Actually, I want to get into a 5-minute. Yeah, let's get into a 5-minute, because I want to show you those pullbacks. It's actually really, really interesting what the euro started doing, because it started giving you a lot of opportunities. So I got up during, again, I shorted here, right? And then I waited up until London session. Here's London session here. I drew my fib. It goes from here to here. Boom, 6.2. I think I actually got in on the trade like right here, right at the 50% mark or something like that. Because I was trying to do it manually. I didn't have anything set. I was hoping it was going to get lower to like the 0.7 or something like that. But once I looked left, I realized that was the start of the you know, the order block going down. So you know, that completely makes sense why it just dipped down into that and then started going the other way. I think I fell asleep on the couch because Thursday I was just waiting for this to just, you know, continue to keep on going. And then I think it was 4:30 in the morning is when it starts giving you opportunities to start buying again. So what I honestly thought is that, you know, here at this low, right, and then we're gonna go to this high, and I thought, you know, once you saw a little pullback, we saw it get higher. Not even thinking break a structure. That it's not going to pull back lower than this low. I wasn't even thinking about that. I don't know why I wasn't thinking about that. I should have been thinking about that, but I wasn't thinking about that. Let me have a drink from my sponsor here. Today's sponsor is Red Bull. Thank you for sponsoring me, Red Bull, even though you really don't sponsor me. But that's what I thought I was going to do. So I'm sitting here waiting for a pullback. It doesn't pull back, and I'm like, well, should I pull the trigger here? Actually, it wasn't this one at all. It was over here, because at 450 I wasn't awake. But I was seeing these, and I was thinking eventually it was going to pull back like way down here. Not even thinking, you know, boom, it hits this high, it comes down, it comes back up, break a market structure. It's not going to come back down below this low. Wasn't even thinking about that. I was too early in the morning. You know, I need to drill my trading plan in my head instead of sometimes just thinking off a whim. But if you do actually look at these really closely, you see how many entries that you have, or how many entries EURUSD gives you throughout the entire day. It's insane. So yeah, that's a wick. I'm not going to worry about that. That's a wick. I'm not going to worry about that, because these are 5 minutes. Boom. Here's entry number 1, 4:40 in the morning, right? Entry number 1, 4:40 in the morning, right? It's in between, you know, like the kill zones, I guess you could say. So it makes a new high. It doesn't really do anything with that new high. It just kind of keeps going higher. And so now we have a new high. And so now we go to here, and not only does it hit the 618, but it comes lower, actually. It comes lower, and it almost, it gets to this last red candle, gets about halfway through it before it rejects back up, right? So it gets a little bit deeper than what I would expect, but when it usually does get deeper, a bigger reaction happens, and that's what happened. So bigger reaction happens, and this is at 7 o'clock in the morning. So this is the one this is the New York kill zone. This is the one that people probably should have been taking if they were looking for some kind of you know, a trade to take. I'm gonna pull it back here, and even if you pull it back here, it does get past the 6. They get, you know, actually that would have been more perfect than anything. Even though it does break market structure twice, if you had pulled the fib from here and then jumped in at this, you know, the 0.62 level, you would have had very little drawback, and you would have just, you know, taken off with that. I want to say that was a good 15-20 pips or something like that. Oh, damn, so I hate that thing sometimes. Instead of using that, I'll use a date and time range. So let's say you do hit, you know, you did get in at the 0.62 plus add a little bit for your spread. You take this up to here, 21 pips, you know, 20 pips. That's a pretty good scalp from 7:30 to 8:30. And even then, if you would have held on to it, you would have got another entry. You know, the thing is that I was looking at this thinking it's going to continue going up until it hits, you know, 1.184, 1.185, and I wasn't even watching this during the day. I should have been, because the only thing I did was I think whenever I woke up and I saw it started pulling back here, I didn't know how far I was going to pull back. I wouldn't even worry about an entry. All I knew is that I had made quite a bit, and I just wanted to get out of the trade, and that was a rookie mistake, and I got out of the trade. But after I sit here and started looking at this, it just gives you entry after entry after entry. So here, right, let's look at this one, and you pull this one up here, right? Boom, there you go. Again, nails the 70.5% retracement. I mean, optimal trade entry again, and then you take that, you could have held on to that, right? And then here it does, here it makes this high before it makes another pullback. Actually, it makes this high before it makes another pullback. It almost gets to that 62%. But I don't even know if I would even risk it. I mean, sure, why not? If you can get into that one, why not? There's another position for you. But here it just continues going higher. There we go. We make a high, and we break market structure again. And it pulls back. Where does it pull back to? The 70.5 optimal trade entry level. It's like, okay, how many times are you gonna do this? And then there it goes. It breaks market structure again, and we'll go from here. Where does it go to? Almost the 70.5 optimal trade entry. It was like it was just so methodical. How many times it kept doing it, and it kept doing it, and it kept doing it. Look, boom, here. This one a little bit deeper. But to be fair, this point right here, okay, so here is the point where things started getting a little bit different. And things started getting a little bit different is because here was a breaker, right? So let me back out of this. Let me go to a 1 hour chart. And there it is right there. So here's the breaker. Boom. And so now we're on the breaker, and let's go back to that 5-minute chart. So as you can see, this is where sells started happening. Or at least this is probably where sells are starting to gather, I should say. But that's where we're starting to have trouble make even higher highs, and so at this point, since it did make 3 of the same highs, I looked at that and I said, Jesus, like it's got to break through it, just because of the liquidity. And sure enough, it did. Broke right through it because of the liquidity, and that was right at the end of the day. So if I would have just held on to this trade instead of actually, letting go of it right around in here, whenever it was like pulling back in the morning, because I didn't know how far it was going to pull back. I didn't know if I was going to find the good trade entry or not. I wish I would have just held on to it, because I didn't find the trade entry. And I didn't find any of this other 16 trade entries. How many times have I turned this thing to a completely different sound? I've been using my headphones, and all of a sudden it just decides to come through the MacBook speakers. Anyways. Give me 1 second. Let me turn off where that... There we go. That's where that was coming from. Okay, sorry about that. And we are back to EURUSD. So, I actually wanted to sell here and hold over the weekend because I knew it'd probably drop a little bit. I actually did sell. I only gave it a 3 pip stop loss, and unfortunately after it hit those three equal highs, I knew I was dead. I should have added my stop loss a little bit higher. But then again, I was like, you know what? Let me have just a little bit more leverage over the weekend so I can trade some crypto. So I let it hit my 3 pip stop loss. I wasn't too angry about it. Even though I probably should have actually, because I probably would have had quite a bit more. Well, you know, actually I didn't do too bad on crypto this weekend, but if I would have just held that from that's because I sold it from right here, and let's just say I got out at right there. Hey, an extra 13 pips. Actually, you know what? No, I'm glad I hung out and did crypto over the weekend. Either way, I just wanted to show you how insane, how many, you know, optimal trade entries there were on the way up throughout the day of the New York session. Usually never see anything like that. So I don't know. It almost seems like that's a trick. Like, why would you give so many, you know, trade entries? Like, you know, there's just so many trade entries on the way up, unless you're trying to, you know, tell people, hey, this is going to keep trading higher. And I think that's what it is. I think it's a trick trying to trick people into trading higher until you got these 3 highs, but then boom, it traded higher than that. And I think people are actually going to think it's going to trade higher than this, right? I think that's what it's trying to do. We get a little pullback here. I don't know where this pullback was going. I don't know if it's going to pull back any further. So far, the Asian range isn't really doing too much. What do we got for an Asian range right now? Jeez. Let's 12 pips. Yeah, not too bad, you know. Still Asian range, 12 pips. If I don't really know how to incorporate that into, hey, it's going to go up here and this is where you know, it's going to sell off. You know, like I said, I've just done as much studying as I can on this pair, and that the confluences that I have are, you know, directly related to this 1.86 level, right? Like, it's almost ridiculous how close this you know, that level is. So like I said, I do want to enter a little bit early. Like, I want to enter once it hits about that 1.4, just so I know for a fact that I'm in, because that's also where, like, the, you know, the bearish order blocks start. I want to put a little bit here, and I want to put a lot in just before, like, this 1.86. I have a feeling like that's where it's going to be. But that's just me. That's my Euro USD analysis. After it's there, I'm going to hold on to it until it hits 1.14. I'm not letting go of it. You know, I'm just going to let it ride all the way down to 1.14, because I have a feeling that's at least where it's going to go, is 1.14. I might try to catch the, you know, the pullbacks, you know, and buy the pullbacks, but I am not letting go of a very large. Well, maybe I should put my sell limit in here now. Now that I've, why not? Let's just go ahead and put my limit in here on the Euro USD. My limit price at the 1.14. All right. Let's go with 1,000. Right. Stop loss is going to be at 1.9, because I don't think it's going to. This is a sell, you dumb. And take profit is going to be at 1.14. All right. So let's go ahead and put that 1,000 in for the sell limit. All right. And then let's do another one. Let's put the sell limit at 1.185. All right. Let's do a little bit more. Let's do 2,000. Stop loss 1.19. Take profit 1.14. Right, and then let's do, even though this is fake money, if this is my real account, this is what I would be doing. And I would be doing it at 1.1550. I probably should be doing it at 1 at 6. But I'm going to give it a good 5 pip head start. Just in case. But, right, and then stop loss 1.19. 45 pips, take profit 1.14. 445 pips. And let's go ahead and put that limit into place as well. So these are my limits that I have. Pullbacks, I think we're probably going to see the first pullback. You know what? We'll talk about that when it gets there. First of all, let's get through the London session. Let's see where price is at in London session, and we'll give an update then. How about that? Because I got a couple other videos I got to get through, and I've already talked long enough. So thank you very much for listening to me ramble about EURUSD and about my thoughts and everything else. And if you like what I have to say, go ahead and hit that subscribe button, notification button, whatever you want to do. Find me on Telegram. I'll put all my information, where you can contact me, how you can follow me on TradingView and things like that in the information. Yeah, that'd be great. Like I said, I got a couple more videos coming, probably one on the cable, one on CAD, and I think I'm gonna do a hodgepodge of a couple other different things. So I got a couple more videos coming, but EURUSD is definitely one that is on my radar, one that should be on yours too. And I wanted to get it out before the London Open, because people should see this before the London Open, that's for sure. Thanks a lot for watching, and always remember to keep your pants on.